Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Alexandra Mousavizadeh. She's the co-founder and CEO of Evident to discuss why the adoption of AI is critical to banks. Alexandra, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me, Jill. Pleased to be.
You got it. A new report from research from firm Evident Insights found that U.S. banks are leading global AI investments, with U.S. banking giants like Wells Fargo, Goldman Sachs, First Citizens, Citigroup, and J.P. Morgan. They're responsible for almost 50% of early stage AI investment deals between 2017 and 2022. So, Alexandra, we know adoption of AI is critical for banks to gain and maintain their competitive advantage. You see this already in technologies like high-frequency trading, all the way to customer service. What do the 5 top banks have in common with how they're using AI?
Yeah, thanks, Jill. I mean, at Evident, we published the first public ranking on banks and in their AI adoption or AI maturity. And as you said, the US banks came up in the top 10, with a few European banks in there that also did pretty well. But the markers of AI maturity and being far along that journey of AI adoption is really having a vision, being very clear about that, resourcing early on. So what we see as common denominators are a high focus on researching for AI, investing in AI talent, and hiring from big tech and academia is one of the common denominators. Having a high density of AI talent as a proportion of overall talent. It's how you infuse the bank both at the top, but also through the business lines with an AI innovation culture. We also see AI-centric models that banks are following in the US is having a centralized decision-making process that is a top-down approach that is married with a bottom-up approach that surfaces the solutions, AI-driven solutions in the business lines that then can be put into a use case repository and decisions being made on how to prioritize and what to prioritize. So very important to be able to calculate the value of the use cases and the return on investment, but also understand the complexities and the sophistication to get a model from ideation and all the way into production.
Your report found that North American banks put out 6 times more research and filed 99 times more patents than European banks, evidence of a widening innovation gap between the two markets. Why do you think the U.S. banks are leaning in much harder to investments in AI?
Yeah, I think the U.S. banks look at big tech as models for shifting these legacy organizations to become AI first. And so what they do is that they have most of them establish a center of excellence in an AI lab. J.P. Morgan has a big AI lab, 250 strong, led by Manuela Veloso as an example. They lean in. They've been doing this for a lot longer than many of the European banks. So they focused on having pure AI research, but also applied AI research, being able to operationalize that across the banks. And so having done that for longer and having bigger teams doing that, you see that they're very quick to adopt innovations happening on the front end of AI. And so that's the difference. And that's why we're seeing this gap between the US and the European banks.
Right. And more US banks are also investing in AI startups. 60% of banking industry investment into AI startups stems from the US at Wells Fargo, Morgan Stanley leading the way in terms of number of investments. What is the role that banks have in investing with AI startups?
Yeah, it's a very key point in terms of when you look at your tools in which you use to for AI implementation acceleration. So one is partnerships with Microsoft, Google, IBM, or NVIDIA, and others. Others are to invest strategically in AI companies to onboard those capabilities into the bank. So the banks that are leaning in to strategic investments in AI companies that get used across the banks are also they have those capabilities sort of in their network already, and therefore are faster and more capable of adopting AI at a speed that others that don't make those kind of investments are unable to do.
Mm-hmm. And finally, and I think this is one of the more interesting points, we're seeing banks hiring AI talent away from Silicon Valley, but data shows they are struggling to retain talent. So what do banks need to do better to compete against the Valley for AI talent?
There's a war on talent, and it's a small pool of AI talent out there, and everyone's fighting for it. And they have a lot of good AI talent. There's a lot of places that they can go. banks are just one of them. So the things that the banks are needing to do in order to attract AI talent are a couple of things. It has to be an attractive place with interesting use cases to work on. A lot of the AI talent likes to have the ability to produce research that gets presented at AI conferences, being able to participate on open source platforms, and also seeing their work being protected through patents that get filed. They might not stay at the bank forever. They might want to seek a career outside of banking. So having a strong footprint in anything related to AI, deep learning, causal AI, synthetic data that can be used in other sectors is important for AI talent to have that ability to showcase that work. So those are some of the things that the banks are doing. In addition to having dedicated AI hiring teams, some of the leading banks have dedicated AI hiring resources within the bank and really understand how and what they need to do in order to attract the talent.
One more question for you. Actually, you had mentioned they like to work with open source. Is that a challenge for banks from compliance and regulatory perspective?
It is not a challenge for banks, though many banks choose not to have their employees active on open source, while others are doubling down because they understand it's a very important network for exchange of ideas. As long as it's not something that's sensitive, that gets released on open source, which they're very careful about. The AI talent really likes to have that that platform to exchange ideas with peers. There's some banks who are saying, if you find any people from our bank that are active on open source, please tell us because we want to remove that. Others are saying we are doubling down on it because we know it's incredibly important. So we're watching this race. There's an enormous amount of poaching going on among and between the banks of AI talent. And especially now with, these capabilities are extremely important for the bottom line of the banks. And now where there's a real return on investment questions and how much is being invested and what is the return on investment, the talent is ever more important. So that poaching is something that we watch very carefully as well.
All right, Alexandra, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.